Good evening, everyone. We have a few folks on the call already. It is currently 5:27 p.m. Pacific Standard Time. We are a few minutes from starting. I just wanted to say welcome everybody to this presentation that we have today about budgeting and money management. So we'll give it a few more minutes and before we get started to give folks a chance to hop on in here. But welcome all those that are here. So I will mute myself for now, but we do have the chat function here. We see people jumping in the call here now. Just as a friendly reminder, we'll be starting in a couple to a few minutes before we start our presentation. So thank you for your patience and thank you for being here this evening. Or if you're watching this on demand, welcome. I'm glad you're here. Welcome, everybody. We have more folks trickling in. Thank you so much for being here this evening. We will be starting in about a minute or so. We want to give folks a chance to join in here. Um, Thank you all for being here this evening, whether you're tuning in remotely. We appreciate you. Before we get started, we will have some housekeeping items, but again, thank you for being here. We'll be starting momentarily. Good evening, everybody. It is currently 5:30 p.m. We're about to give it a minute or so. We have some more folks jumping in here. Um, let's see here. Fantastic. What we'll do is we'll start with some introductions before we get tonight started. That gives the folks a chance to jump in here. So, really quick, I just wanted to say that I'm being joined by our very own Zoe Carlo, who will be moderating, facilitating. Hey, Zoe, if you don't mind coming off of mute and just introducing yourself and letting the folks know what you do at the credit union and maybe why you do it.
Hi, so I'm Zoe. I'm the content specialist at Premier America Credit Union, and I'm in charge of all of our social media accounts. And I'm so happy to be here. I love the credit union's message and wanting to really help our members and the importance of financial education and love what Alfredo does. And I'm here to support and help answer any questions that come through the chat. So I'll pass it back to you, Alfredo.
Thank you, Zoe. I appreciate that. really quick, my name is Alfredo Martinez, and I am the Financial Inclusion Education Officer here at Premier America. Um, I have a slide that will talk a little bit more about myself, but I've been in this space for a little over 8 years. I am an accredited financial counselor, and so I love giving information when it comes to financial education, financial literacy, something that is very important for our community that's needed. So we have a really great conversation today, budgeting and money management, but I'm going to take a little twist on it and how we build resilience through this. So, really quick, Zoe, can you just confirm that you can see the resilience through money management that's being shown on your screen?
I don't see it on my screen. Oh, I see it now.
Fantastic. Okay, cool. Let's see here. Oops, apologies about that. Here we go. Okay, so we're trying something new with Teams here. We used to be on a different platform, so I appreciate your patience. So for those that are just tuning in, I saw a few folks trickle in here. We have the wonderful Zoe behind the scenes, who will be help facilitating the conversations in the chat and in the Q&A. So please, 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 feel free to use the chat and the Q&A function. We'll try to reserve questions towards the end. But if there's anything pressing, we'll definitely do our best to answer it throughout the conversation here. Um, and we highly recommend, engaging via the chat and the Q&A. So we have more folks trickling in. Welcome, welcome. Today's conversation is resilience through money management. I'd love to just kind of get a pulse in the room. If everybody that's here on the call and that can access the chat function, where are you tuning in from tonight? Feel free to drop in your city. I'm just kind of curious to see where folks are tuning in this evening. Awesome. So I'm seeing a lot of comments in the chat. We have Woodland Hills represented, West Hollywood, Simi Valley, Camarillo. I love it. Fantastic. So we have a little bit folks from Ventura County and the greater Los Angeles area. We have Inglewood, fantastic. I'd love to see where folks are and where you're tuning in from. Just kind of helps, again, create some engagement and dialogue. So fantastic. The good news is about these workshops is we're going to continue to host workshops every month. So if you heard about this workshop through the email, through social media, or through our Eventbrite page, please know that we're going to continue to have conversations every month about different variety topics. Next month, we'll be talking about credit and credit reports and scoring. But I'll go ahead and give another reminder towards the end of the conversation for those that want to tune in. Today's conversation is about budgeting and money management. So again, please feel free to use the chats, the Q&A as we go through tonight's conversation. So again, my name is Alfredo Martinez. I am the Financial Inclusion Education Officer here at Premier America. I am an accredited financial counselor, and I've been in the financial services for over now 8 years. And my passion is economic empowerment. A lot of these conversations, when it comes to financial education, financial literacy, if we didn't have somebody in our corner to help us understand some of these things, we really were left to kind of figure this out on our own. Which can be sometimes we learn through our own mistakes. So I definitely have my own experiences with that. When I speak about money and money related matters, I speak from what I say my own mess because we all have all made some mistakes and challenges when it comes to these certain things. So I just wanted to say that today's conversation is to help empower us to get us to a better place when it comes to money and money management. And this is something that's not only something that I do professionally, but a deep passion of mine. So just a couple housekeeping items again, because money and money management, we all have different experiences. We all have different understandings of this matter. Some of the content tonight may be new to you. Some of it may be things you've already heard, because we all have different starting places when it comes to financial education and financial literacy. So if we use the chat tonight, speak your truth, and let's be mindful of those that are sharing comments and things of that nature. Talking about money and these conversations can sometimes be uncomfortable, and chances are we are all have similar challenges or facing similar struggles when it comes to money and money related matters. Any stories or things that are shared in the comment, they'll stay here, but we'll let that learning leave with us. And expect and accept non-closures. That just means is that sometimes we don't have all the answers, but we'll definitely work towards giving you some response or a follow-up or feedback. If Zoe or I can't answer a question for you, we'll definitely follow up with you. And as always, engage with a growth mindset. We need to improve. And really quick, you know how I had mentioned about financial education not being something that we're usually taught with? A lot of that's going to be changing for our future generations. So for those who may have not heard of the good news, a bill passed as of last year in 2025 that by 2030, all public high schools need to offer a semester-long course of financial education. So that's a good news and a good win. That means that a lot of younger folks are going to be getting this a lot earlier on, if they are not already receiving it in their households. Okay, so I want to hear from you all. So again, I want some engagement. I want some conversation. Let's take a moment to answer this question and put your responses in the chat. What's the first thing that comes to your mind when you think of financial success? I'd love to hear from several folks in the chat about this. And then Christine, I did see your question here. Did you say by 2030 or will it start in 2030? So by 2027, they have to have a program in place. By 2030, it has to be all. It's kind of like they for sure need to have it in place by then. Of course, yeah, I think it's awesome as well. Alrighty, so I do see some comments coming in here. Joe, thank you for your comment. Increase in net worth, financial success, absolutely. What are some other folks thinking? So when you financial success, and financial success can mean something to a little bit something different to everybody. There's no right or wrong answer here. I just love to see what folks, what comes to mind. So we have debt-free, retire ready, absolutely. The ability to retire comfortably, 100%. Veronica says debt-free. Of course, financial success is subjective. It can mean different things for different people, but it generally means that we have the ability to live life to the fullest. That means that we have a comfortable retirement. We're not worried or stressed about the future or the present when it comes to money matters. And debt is one of those things that can definitely do that. Retirement is another one. And so we're going to talk about some different strategies and different ideas on how everyday money management can help us get us to where we need to be. So thank you again for the comments in the chat. If you have any other comments or if something strikes you throughout the conversation, please feel free to use the chat or the Q&A function there for us. And so it's no trick. There's no really get rich scheme here that we'll be talking to tonight's. Money management is really a way to say how disciplined can we be with our money matters. It's a long-term mindset versus a short-term mindset. And can be very tough, especially for younger people, because sometimes we were so used to having things, now. We were used to wanting things, in the immediate. When I was studying in university, one of my college professors called my generation the microwave generation, which is something that stuck to me because she said that, you guys want everything right away. You guys are so used to having everything right away, which I thought was quite funny. Um, but there's no trick to this. It's just a matter of do we have the behaviors and the motivation and the value system to help us get to where we want to be. So that's kind of the high theme here. But we're going to build some resilience through money management. So what we're going to do is we're going to understand financial wellness. We're going to learn how to assess our financial situation, create a financial plan, and what are some lifestyle adjustments we can take into consideration today, how to seek professional help, and lastly, we're going to finish off with encouraging and practicing financial well-being, which is a state where we all want to get to. So that's where we're going to start the conversation, is understanding what financial wellness. You know how I started the conversation with what does financial success mean to you? And while there were different answers, they were all similar in nature. So I want to introduce this concept to you of financial well-being. This definition comes from a report done by the Consumer Financial Protection Bureau, the CFPB, which is a federal agency. And they did a report in 2017 that essentially set out to do two things. They wanted to better understand how are average Americans doing in the United States, and they also wanted to put a definition and a process to better understand financial wellness. So what they said was is that financial wellness can be defined largely by these three things: making choices that allow them to enjoy life. So a common example that I give here is that let's say one day or one weekend a good friend or a family member, calls you and say, "Hey, you know, let's go on this unexpected trip, whether it's an amusement park, a concert, or, across the country, having the means to kind of have that spontaneity to say, yeah, I can do that. That's what making choices that allow us to enjoy life means. Meeting current and ongoing financial obligations. So that's another way of saying is our day-to-day and month-to-month finances being taken care of, which is something that's essential to our well-being. And then lastly here, can we feel secure in in our financial future? So to a lot of the comments about being retiring ready, do we have, that retirement account, whether it's an employer-sponsored retirement account like a 401k or 403b, or are we doing other activities like an IRA to help us feel secure? Because I think a lot of us are have the understanding that Social Security is not going to be quite enough for us when we get to that retirement age. So, how can we feel secure in that financial future? So, this is largely a broad definition, but this is how the CFPB defined financial well being. And so, today, part of what I want to do is help us get closer or put us in the practice of financial wellness and financial well being, because that's exactly what financial well being is. It's a practice. And one way to get there is through money management. And so I wanted to introduce that to kind of set the stage for the conversation that's going to continue here. And so, part of understanding financial wellness is understanding that personal impact to us. And so this may not come to a surprise to you, or it may, but in that report, although it's a little dated since it was 2017, and I can't imagine what folks are now at, but in that report, we learned that one of three adults does not have any savings at all, and 40% say they do not have enough money saved to pay for $1,000 financial shock. And so I don't know if that's news to you, or if that's something that you've seen in your community. But imagine having to buy new tires. Maybe an emergency medical bill comes up, or something happens to your home. We have some rains going on or have gone for the past week. If you have to have a leaky roof, taking care of that can be a sudden expense that we're not quite prepared for, as an example, and it can create stress, and it can create a whole sort of things that can make us feel some type of way. So again, I'm just starting off with the aspects here of financial wellness, because practicing good money management can help us alleviate some of these things and talk a little bit more about how to get there. So those are the numbers. But we know that money is not just a numbers thing. Money makes us feel a lot of things. And so, real quickly, I just want to talk about how folks connect strong emotions to money, because a lot of money help us fulfill our basic needs. When I say basic needs, I mean housing, transportation, healthy food, access to a quality life, through education, through a good community, and so, this is more so of just not necessarily a call out, but something for us to think about on what effects, or what maybe physical effects are we having because of maybe some of the stress that we see within ourselves, within our community, or our loved ones. Folks may have become more anxious. They may associate, net worth to like self-esteem, things of that nature. Maybe you withdraw yourself socially because you're not where you want to be financially. So maybe you feel some sense of regret or embarrassment, as an example. And so the first part of this is to help us understand what financial wellness is, because we know that money is not just a numbers thing. It makes us feel certain things. It can make us feel really good. It can make us feel really bad, and all in between. So having a better awareness of that can help us better understand our relationship with money, and how we can, put into practice healthy money management practices to get us where we want to be. So I know that's kind of starting off with some of the more emotional, pieces of money but that's not to say that there isn't strategies and practical ways to help us to get to where we want to be. So I hope that that was helpful to help us kind of gear us for the next steps of the conversation here. And again, the goal is how do we build resilience through budgeting and money management? But real quick, before I go any further, I just want to take another pulse of the room. Who here, if you don't mind sharing in the chat, actively budgets or actively budgets on a month-to-month basis? You can just say me or I do. I'm just kind of curious to see. And there's again no shame if you don't or if you'd like to start, start budgeting. I'm just kind of curious to see where folks are in the room when it comes to practicing money management. Yeah, I appreciate your honesty there. I appreciate your vulnerability. Some folks are saying, I do not, but would like info on it. I try sometimes. And that's what we often see at the credit union. We see folks, again, another comment saying inconsistently. It's such a tough thing to do, right? Because on top of managing your day-to-day lives, maybe you have families, you have children, you have responsibilities, you have social obligations. Um, when do we find time for this? And that's such a real thing to say and acknowledge. And I appreciate your honesty in the comment section there, because it is a tough thing to do. So let's go over and talk. We're going to now jump into the larger part of the conversation on how we can do that and how we can help, how your credit union can help you. So, but before we do, I just want to get another quick gauge of the room and see what folks feel in the room. And again, no right or wrong answer here. I want to ask, can you budget your way out of financial problems? What do you think? Yes, no, maybe. Again, no right or wrong answer. Just want to see folks engage and get different, see what folks are thinking out there. Okay, so I see a combination. I see yes, no, yes, hopefully, yes, yes, depending on the financial situation. Yeah, so we're a little bit mixed. We're a little bit half and half. Somebody says, I hope so. Unsure, possibly. Yeah, so this is a great question that I ask a lot of folks when I talk about this subject. Why do I ask it? Because my response to this question is very much like somebody said, it depends on the financial problem. Because some folks may be experiencing an income issue. What I mean by that is maybe they're not making enough to fulfill their obligations, and that can make it very challenging for somebody. Maybe there is somebody who, with just a little bit of guidance and good practice and good follow-up, can build the habits to manage their money, and they can get out of their financial problems, whether it's paying down debt, saving for a goal, you name it. But then we do also have extreme situations where we need a different type of intervention. So, as an example, I will reframe this question. Um, can a somebody who's addicted to gambling budget their way out of a financial problem? And so when it comes to money matters, there may be folks with facing different types of situations and challenges, and where simply setting a budget may not necessarily, help them. And so a good point of reflection is understanding what challenges are you facing, and how is it that we can, and then what is the best way to tackle that challenge. Um, hello, hello everybody. I'm so sorry about that. My internet went out. Um, I hope that you can see me and hear me now. I think I should be okay. Um, Apologies about that. Yeah, so sorry about that. Okay, here we go. Apologies about that. Thank you for your patience. Where I was talking about budgeting, and I think where I cut out was just talking about the different types of interventions that we need, and that sometimes can vary by the type of challenges we have. So let's go in and continue the presentation here. And so the goal, if I could put a big picture in front of you right now, this is what I would say is maybe the goal or something you can aim for. And this may be a good reflection point to ask yourself, do I check off these boxes? Do I feel like I'm managing my finances or do I feel like my finances are managing me? Am I able to pay bills on time? Am I on track to meet financial goals? Or am I able to cope with financial challenges of unforeseen life events, which sometimes is the hardest part when that happens here. So again, this is kind of the big picture, and this is what we'll hope to get to this evening, or at least get you started on that path. And we're going to start off by talking about a financial statement. So for the folks who had said that it's very tough to be consistent with, finding the time or finding the space to do this, this is generally what I ask. This is generally what I recommend. Let's find one day of the month. So right now it's February 19th as an example, and this is a shorter month, right? We have till the 28th. Somewhere between the last couple days of the month and the first few days of the month. I know it's tough, or if you need to do this at a different time frame, but pick one day of the month and block out 2 hours to the best of your ability. 2 hours is probably a lot to ask of anybody, but if you could find a day of a month where you can block out 2 hours and you can come to the credit union um, and just have a dedicated space and time to do the following, which I'm going to talk about. And of course, we have financial professionals there that can help you through this process, and it really won't take you much more than an hour, but the 2 hour gives you enough space to get there, maybe grab a drink or food and just sit down. And so you have enough space to feel comfortable and ask questions and go through this. Of course, you can do this at your home, in the comfort of your home, but sometimes it's better to go to a space where it's neutral and you have the space to do this, and we have that space here. So we're going to talk about what a cash flow statement is, and this is such an important financial document that is really helpful for a lot of folks. So a cash flow statement is just a fancy way of saying what came in and what went out. So for example, as we approach the end of the month, for February, you would want to do a cash flow statement for the month of February. One cool thing that we'll do is on the emails, once we'll send a follow-up email with you, we'll include attachments to some cash flow statements and some of the statements we're talking about today. So if you wanted to get started, you can do it. Or if you're like me, you can just grab a pen and paper and write your income, right, and list your total expenses. Or if you like technology, there's a lot of applications in the App Store or even online. Or if you're good with Excel or those types of softwares, you can use that. But the idea is simple. We know how much money we made in the month of February as an example. So let's fast forward to February 28th, or the beginning of March. We know how much money came in. So we're going to list and total that. The next step is to list and total all our expenses, and that can be a little bit tougher. So this is where we need sometimes our bank statements or our mobile app on our phone to help us determine what money went out. And the idea here is to calculate that difference. So you had the money came in February, and you spent this much in February. Did we have money left over, or did we not? This is such a wonderful exercise to help folks understand where their money is going, but it also helps folks understand what type of consumer they are and where their money is going, and maybe where some changes can be made. So a fun example that you could do with this is if you do have a paper statement, you grab a couple highlighters and just highlight, different buckets of expenses. Like, am I is like, for example, I don't know, orange for eating out as an example. So you can get a visual cue right away of where your money is going if you were to categorize them in certain buckets. And the cash flow statement is probably the most time consuming statement, But the neat thing about this is once you do this, you're kind of setting yourself up for success for March, which we'll talk a little bit more about what that spending plan or a budget is also known as. And how that all comes into play. So this is the cash flow statement, and you're looking into your past. So this is one way to start beginning assessing your financial situation when it comes to looking into the past and using the statement. So again, for those that are following, this is will be recorded, so you can come back at any point in time to look at this. And as I mentioned, as we follow through our communications, that's something that we can do. So Lisa said, I just want to call out this comment. We use Excel, however, it's hard to keep it updated. Yes. We work with our members and certain clients, we find that the use of technology is super helpful to get us started, but then going back there every month and updating can get quite clunky. So for you, I would say maybe consider having a pen and paper. Normally, what we do is I like to have a binder essentially of 12 of these. And so you can do the whole year. So you have a binder and you have 12 of these documents and you just come back to that binder every month. You come back to that binder and you just kind of fill it out. And so you will have your cash flow statement and you will also have your spending plan slash budget, which we'll talk about here in a second. So I find that a little bit easier to build motivation and momentum because it's so easy for us to forget or jump back on our computer and just like, using Excel or software like that. It's just not very fun and there's a lot of pain associated with that, I feel like. So I hope that's helpful. And so this is probably one of the most important. Next, what I'm going to talk about is what we call a balance sheet. This one's not as important as the cash flow statement, but it's still super helpful to assess your financial situation. So somebody earlier in the conversation talked about what a net worth and what net worth is. And so what we have here is what we call a net worth statement, or also known as a balance sheet. The neat thing about this document is that it's only done once a year. And this document is usually done in the beginning of the year, or for folks who speak to a financial advisor for the first time, this is usually done in one of those first sessions. So, really quickly, why is a balance sheet, also known as a net worth statement, important? Well, this is just a financial snapshot of the present day in that very moment when this is done. And this tells us whether an individual or a family is can show solvency. That is a fancy way of just saying is if I needed to pay everything that I owe today, do I have the means to? And so this helps us better understand is, and it can help us better get us to a goal that we need to. So the way that this statement works is that you would list and total all your assets. And so what are all of these assets? These are like the money in your wallet, the money in your checking account, all your retirement accounts. If you were to sell, if for example, if you own furniture, a fridge, a sofa, if you have a jewelry collection, if you were to sell it today at a fair market value, what would that value be? And so the idea is that you kind of go around your house or you go around your home and then you kind of put a value to the things that you own. And again, so these are monetary assets. So this could be like the money in your wallet, the money in your checking accounts. You have the tangible assets, which is like the furniture, the car, more of like your property, so to speak. And then you have the investment assets, which is like the 401ks, the retirement accounts, the IRAs. And the idea is that you list all of this and you total it. And then you go and list all your liabilities, which is a fancy way of saying is everything that you owe. So do you have credit cards? Do you have an auto loan? Do you have a mortgage loan? As an example. And that helps you better understand where you are and if you needed to pay everything off today, can you or do you have the means to? Most folks have start off life with a negative net worth, and that's just kind of natural because maybe we invest in buying a home or we invest in education, as an example. But this one's not as pressing, but it's still an important financial document that helps us better understand how to assess our financial situation today in that very moment. So this is again the net worth statement. And I do have a slide here that I really quickly want to talk about. what is the median net worth of Americans? So this came from the U.S. Census Bureau in 2020. So it's a little dated, but we're hoping in the next Census Bureau we can get some more information. But as you see here, we have this is a bar graph with two colors. We have the blue and then the red slash orange. The blue bar represents the median net worth of Americans by age ranges. So it starts at less than 35 years and goes up all the way to 75 and over. The red bar or orange bar is represents folks' net worth, excluding the equity in their home. So they may not be homeowners, as an example. So essentially, the folks that are on this bar graph here did the net worth statement or the balance sheet, and then we're able to determine where they are. So I show this graph for two reasons, and I like to talk about it because the first reason is that most folks don't reach their peak net worth until their later part of their lives. So if you see here, the highest dollar amount is 194,000, and that's between the ages of 64 to 69. And these are our neighbors, these are our peers, these are average. This is the median net worth of Americans across the United States. So I say that because a lot of folks sometimes we tend to compare ourselves, especially younger folks. We see success and we want to mirror it, but this is a long game. And the conversation today is about budgeting and money management and building resilience through these activities. This is how you can get to that point. The second key thing that this bar graph tells us is that home ownership is still the single greatest way of developing generational wealth and equity for yourself. And believe me, I'm from Southern California. I know it's very difficult, and today's housing market is ridiculous, but it's still not at a grasp completely. There's a lot of government programs such as Wish, where they'll match dollar for dollar up to a certain dollar amounts for first-time home buyers. And so we have a great mortgage team for anybody here on the call that is interested in home buying. We offer these services as well. So again, I share this because of those two reasons. One, encouraging building generational wealth, and two, knowing that this is very much a long game. And so setting habits on early can really set us up for success down the road. So we looked at the past, which was the cash flow statement. We look at the present, which was the net worth statement. And now what we're going to go ahead and do is we're going to look for the future. And how do we do that? Oops, sorry. Let's see here. We gotta have to build the word that a lot of folks don't like, budgeting. I like to use the phrase spending plan because I think it's more intentional. When we make a plan to spend our money, we're taking ownership, right? Budgeting has kind of gotten this negative connotation like dieting, where it's all about restriction. Spending plan, we're taking ownership and we're being intentional with our money. So, as I had mentioned earlier, the great thing about the cash flow statement is if you created it already, you can go ahead and make the budget or the spending plan that much easier. But before we build our budget, what we need to have is certain goals. Do we want to pay down debt? Do we want to buy a home? Do we want to save for a wedding? Do we want to save for a car? Are we saving for a child's education? And so I want to introduce to you today, and maybe, excuse me, maybe you've already heard of this acronym called SMART. So SMART is a great way to help us hold us accountable and be very direct with our goals. So we need to be specific. We need to be able to measure it. It has to be achievable, realistic, and timely. And so I have a quick example here of a savings goal that somebody can start today. So for the folks on the call that are employed, let's say you wanted to save some money or you have a savings goal you want to reach. You can go to your HR department and ask for a payroll deduction into a savings account. And so the examples here is that I want to save $1,000 in 10 months by doing an automatic payroll deduction into my savings account. So the idea is that we can go to our HR, ask for a payroll deduction to go into a separate account to help us get to that financial goal. And so that is the example of a SMART goal that can help us get to where we need to be. So once we've identified some goals, whether it's a short-term, medium-term, or long-term goal, we can now then go ahead and budget or put our spending plan according to our goals. Because what good is a plan if we don't know where we want to go with it, right? A common analogy that I often use is sports. Every coach has a game plan going into that sporting events. They want to achieve certain things, and then we find out after the fact, right? And so that's exactly this kind of cycle of a cash flow statement and a spending plan is you kind of assess and reassess and you make changes based on life needs and what you need to do month over month. And so this is a great way to hold ourselves accountable here. And so, coming back to the budget or the spending plan, the main purpose is really to enable us to control our finances and accomplish our goals. Without this, it is difficult to keep in mind the bigger financial picture when making spending decisions. So, very similar to the cash flow statement, it is almost exactly mirrored, but you're looking to the future. So, if we go back to the example of February, and we want to do things in March. So, if we know we have a short-term goal of saving $1,000, you know, looking at the cash flow statement can help us determine if we had money left over, how much of that can we actually put towards our future goal, right? And so essentially what you're saying is you're going to list in total the income that you believe that you will get. This is a lot easier for the folks who kind of have a stable income. For those who have periodic incomes, this can be a little bit more challenging. But the idea is that you list in total your income for what you will be making in March, and then you listen to determine how you're going to spend your income. So as the money comes in, what am I going to do with it? Am I going to go ahead and put a certain dollars to our savings account? Am I going to pay down debt as an example? And the idea is that you're going to either surplus, meaning having money left over, or at least break even for the month of March. So the cash flow statement is looking to the past and analyzing that. The spending plan is what am I going to do in the future? What am I going to do in March? And then I'm going to tie that back to certain goals that I have. Um, in college, I had a professor say this to me once, and maybe you've heard of this. If you fail to plan, you plan to fail. And I think that's so true with money as well. Another common analogy that I give folks when I talk about this subject is like if anybody here has a hobby, if anybody here likes going to the gym, you have to kind of get your repetitions. And if you want to enjoy your hobby or get better at something or become more fit, you have to get those repetitions, and money's no different. And so this is why it's so difficult and why I had asked earlier, like, how's that going? There were some folks who said it was inconsistent, it's challenging, I'd like to. Um, and so my recommendation to you on the call is come into the credit union. Find that time during the month where you can come in, and we can help you with this. And once you kind of get the ball rolling, it's every month gets easier and easier because you start understanding your money that much better. You start understanding what I call the seasonality of what happens throughout the year with your money. In April it's tax time, right? So are we paying taxes or are we getting a refund? And now what are we doing with that? So a quick mental reflection for you all is, do you recall last year if you had to pay or if you got a refund and what you did with it? And so this year, my call to you is let's be a little bit more intentional about that, so we know what we want to do and where we're going. So that's how to us. We just covered assessing your financial situation. We talked about the cash flow statement. We talked about the balance sheet, and we talked about the spending plan. These three key statements, I guarantee you, if you put them into practice and get in the habit of doing them, you will be far ahead of most Americans. Here's an interesting statistic: 7 out of 10 Americans don't actively budget. So what that means is they do what we call mental accounting. That means that we do it up in our mind, which can be problematic at times. We may overestimate how much money we have or underestimate our buying power, and that can really make it challenging for any person. So again, my call to you is not to do this yourself. If you have the means and the discipline, by all means, more power to you. But let us be a helping hand in this conversation. Let us be a helping hand to get you to where you need to be and set these positive habits. Okay, let's see. Um, Covered quite a lot there. I appreciate your patience through that. let's go ahead and continue the conversation and talk about some lifestyle adjustments. So this slide is a little fun, but it can also, I've gotten some feedback on pushback on this. Needs versus wants. This is the age-old, we all age-old kind of question. What is a need? What is a want? And we all always understand this. The only reason why I'm talking about food on this slide is because I see with different members and clients that the eating out budget tends to be an area of area of improvement for a lot of folks. And so my role is not to tell people how to spend their money. My role is to ask you, is does it agree with your budget? And then I follow up with who sets your budget or your spending plan? And they say, me. So are you holding, so I'm just kind of like a mirror saying, hey, are we holding ourselves to our spending plan? Are we holding ourselves accountable? And so, as you see here, the average American dines out about 5.9 times per week. And according to 2021 BLS data, the average household spends about 3,500 on eating out every year, or just shy of $300 per month. And so this is in 2021, and we're in 2026. I haven't been able to find an updated figure here, but I imagine this has gone a lot more dollar amounts. As we know, things have gone a lot more expensive. So I've had comments in the past saying like, well, Fredo, uh, you know, I have children and sometimes it's just easier to pick up some food on the way home. And I say, hey, I totally get that. Again, my position is not to tell folks how to spend their money, but more so, does it agree with your budget? And does it agree with your goals that you have? And so this is where we have to kind of get creative. In that specific conversation with this member, she's like, yeah, Tuesdays and Thursdays, I take the kids to practice and then we just pick up some food from the drive-through on the way home. And I said, that's great. That's great. So then maybe on Mondays, Wednesdays, and Fridays what's the food plan? What's the game plan? Well, sometimes I do go, buy food and sometimes I make it at home. And I said, well, this is an area of opportunity. If this is a must for you, that's totally okay. But remember, we have that savings goal we want to get to, or we have that we want to pay that debt down, right? So this is where we have to have a little bit of, wiggle room or sacrifice because this is the biggest area of opportunity in your spending plan. And if it's a must for you, that's okay, no worries. Where can we be more creative in figuring out how we reduce our expenses? Maybe we got to look at your subscriptions, or maybe we got to look at certain things, or maybe we got to try to find different forms of entertainment with, free entertainment as an example to help us get to where we want to be. So believe me, I'm a big foodie. I love my sushi. I love my tacos. I love my pizza. I love it all. Um, but this is an area of opportunity where most folks have, some cushion to make some lifestyle adjustments. So I hope you found this informational here. Again, I know there's a lot of folks. Um, that this may hit home for a few reasons. So that's the first lifestyle adjustment. The next thing this lifestyle adjustment is called lifestyle creep. So this is more directed towards the young professionals or those that are having experiencing career growth. I really quickly want to talk about this because I think it's something that a lot of folks don't know and just kind of quote unquote creeps in as you experience success in your careers. So let's use the example that you make $50,000 year one, and year three you're making $65,000, and in year five you're making $80,000. So you've had some success in your career, you're making more money. So that's the more of the story. The question here is, I make more, so I should spend more, right? I think rationally we say no, but sometimes our behaviors and our actions, because the lack of money management and the lack of that practice, it tends to leave. So the extra income, so like if we were making do at $65,000 a year and we were having, a decent quality of life, when we're making $80,000, what happens to that difference? As an example, and you see here on the screen, sometimes we spend several dollars per day on coffee. Maybe we start flying first class or business rather than economy. You get the idea, right? Eating out more frequently, more expensive. Again, the idea here is not me telling folks how to spend their money, but just to bring awareness to how sometimes money slips away from us, and how budgeting and money management can really help us keep our head on straight and keep us focused to achieving our financial goals. And I see this with a lot of our younger members, um, or even some of our more our older members who are maybe closer to retirement age, who have to kind of, maybe on more on a fixed or limited income, we have to make some of these lifestyle adjustments to ensure that, these extra dollars are not slipping away through these other means. Again, I think everybody should treat themselves. I think everybody should enjoy life. Again, coming back to the spending plan, does it agree with your spending plan? And if it doesn't, then maybe we got to rework that spending plan to make sure that you agree with it, right? But again, that spending plan is tied back to that goals. And so the topic of today is, building that resilience through money management and budgeting. Okie dokie. So just a few more money behaviors and lifestyle adjustments. I think we all generally understand the idea of using credit cards and being very mindful of that, especially in today's day and age. Uh, for those that don't know, the average American has a little under $10,000 in credit card debts. And so whether we're using that prudently or if we're using that to make ends meet, finding solutions and finding and having conversations and finding the space to talk to a financial professional that can give you options, that can talk to you about how we can get out of that debt in a way that makes sense for us, in a way that moves at the speed of our pace in our life, is very important. Maintaining an intentional lifestyle, I'm huge on that, and I think money management is a great way another area of your life where you can practice intentionality. And of course, relying on your support system, friends, and family. And of course, the Credit Union Premier America is here to help you throughout this entire process. And we always welcome you to come in and stop in one of our locations or give us a call and how we can kind of support your journey from that perspective. So we're coming towards the end of our conversation this evening. So thank you again for your patience and your willingness to engage here. Really quick, financial counseling and coaching is something that we provide here, and it may be helpful to you, or you may need another financial professional like a mortgage lender or a financial advisor. But financial counseling, in quick words, is helps individuals and families resolve financial problems and meet financial goals and improve their quality of life. This is something that we offer at no cost to our community and to our membership. So if you need help building that budget, if you need help somebody, reviewing that credit score or that credit report with you, this is things that we can help you with. And this is why I say you don't have to do it yourself. You're not alone. There's folks like myself and our team members here to support you and to make it that much easier for you to be financially well and experience financial well-being. Absolutely. Christine, I do see your question here. I'll be happy to come back to that slide. Um, I'm just going to finish this last slide and I'll come back to it so you can see that SMART goal. So we partner with a nonprofit called GreenPath Financial Wellness. GreenPath Financial Wellness is a nonprofit that's been in business for over 60 years. And so we essentially, through them, offer all of these services. So if you need help with debt counseling, debt management, credit counseling, setting that budget or spending plan. If you're looking to buy a house, we offer pre-purchase counseling. And really quickly, I'll make a quick note on that pre-purchase counseling. This is a HUD certified agency, so that's the Housing and Urban Development. And so for anybody who's trying to qualify for first-time homebuyer programs, this is a free service that you normally have to pay about $150 to $200 to do so, and it's at no cost. When you reach out to these services and say Premier America. So the only catch here is that it is done over the phone, and it's Monday through Saturday. English and Spanish, and all the only catches is you have to say Premier America called you. I mean, Premier America referred you. So you can either give them a call right there that you see on that phone number. We have the QR code, or you can visit our websites and visit our financial wellness center. And if I can ask Zoe, if you don't mind, if it's possible, can you drop the link to our website and our financial wellness center in the chat for folks that may want to have more access to this at a later time. This is completely, again, at no cost, and the only catch here is that you have to say Premier America referred you, and you get these services for free. Why do we do this? Why do we foot the bill in advance? Because we believe that we should be able to help you meet today's needs and reach tomorrow's dreams. That's actually our our mission and our purpose. And this is one way we can do that for you. So, in summary, today's conversation was about budgeting and money management, but we all know it's not just always about the money, and it's not always about just making that budget, right? We need people in our corner. We need people to help us. We need to have productive conversations in our house, especially if we have a spouse or a partner. Money can be touchy and sensitive. The credit union is a good space to kind of, a neutral ground to have these conversations and find the space to do these certain things. So talk to someone. I challenge you for the month of February, build out that cash flow statement and then build out the spending plan for March. And remember, we're going to continue to have conversations every month about different subjects. So this is going to be a great point for me. If I see, reoccurring names and in the chat, I'm going to ask you, did we do that? Do you need some help with that? So I'll follow up with you and help you, make yourself accountable. So make that plan, stick to it, create budget on a monthly basis, commit to that change, and ask for help. The last thing we want is anybody to struggle in silence. That's the last thing we want. And I know it's cheesy, but we all have big dreams, right? Whether it's buying a home, funding our children's education, going on that dream vacation, you name it. The path can really start here. And know when you start practicing effective money management and putting into practice financial wellness, there's a ripple effect on the folks that see you, and you'll just live a life of less financial stress. And of course, the credit union is always here to support you. So please, before I come back to that slide, there is an incentive for tonight. So we do have a QR code to enter to win a raffle. We do have a link available, um, and I think Zoe's going to throw that in the chat as well. If you can't scan this QR code because you're already on your device, there will be a link in the chat. But if you can scan this QR code, fill it out and enter a chance to win our raffle. We'll be raffling off a gift card. And this is a good reminder that if you come in every month, we'll continue to have these raffles and these moments to win. So please scan that QR code or the link in the chat that will be there momentarily. We can definitely support you with that. Um, so please, if you have any questions, drop them in now. I'm going to go back to that slide that Christine wanted. But feel free to throw in any questions that you have in the chats or in the Q&A function, and we'll be happy to get to them. You're welcome. Um, Thank you, for managing the ideas. So glad that you found that valuable. Of course, as I mentioned, we'll continue to have conversations next month on March 24th, if I'm not mistaken. We're going to be talking about credit scores and credit reports, and we'll be supporting you all year long, every month, to talk about certain things. Yes, I can. So actually, I'm gonna bear with me 1 second. I'm just gonna stop sharing my screen here. Um, because I need to grab that link for you all, for those that couldn't scan the QR code. Bear with me 1 second. So definitely recommend you all to fill that. Let's see. Yeah, of course. Thank you for your comment. So right there, so the link's in the chat now, so you can enter to win a $50 MasterCard gift card. You can enter it there or through the QR code that I showed earlier. But thank you for taking the time out of your evening to be with me and be with Zoe this evening. Like I said, we're gonna have a workshop every month. And we're gonna have not only one workshop every month, we're also gonna be offering it in Spanish. So if you know anybody out there that's a Spanish speaker or prefers the content in Spanish, keep your radar open because we're gonna go ahead and offer this in two languages every month on the same topic. So please grab that link because there's only about 14 people on this call. So the odds are very much in your favor. If you fill that out, you can get a $50 gift card to spend however you want. You can, maybe use that as your eating out budget for the month or for the week, as an example. Um, and I'll shut the webinar around. You don't see it. Let me throw it in again for you. So I threw it again in there. Brittany, let me know if you can see that. Got it. Great. Awesome. Fantastic. So I will officially stop the webinar at 6:30. So you have 3 more minutes to fill that out or grab that link if you haven't already. But in the meantime, if you've already done it, by no means do you have to stick around. If you have some questions, I'll stick around for a few more minutes to answer any questions that you have. Otherwise, thank you so much for being here this evening and engaging with us. We do really appreciate it. We put a lot of energy and time behind these workshops to really make sure that we can support you all. So thank you again. And thank you. I love that comment. All the best to everyone in your money journey. Yes, let's build a community. Let's support one another. That's what we're here for. Yes, I love that, Joe. That's a excellent comment right there. Um, absolutely. For those who didn't see Joe's, he said he's gonna tell his kids to do the same, and for his grandkids to start working to reduce it by 10% for saving. You can do same on the raises. Yeah, I mean, when you make that extra certain percentage on that raise, put that towards your retirement account, or you can use that to increase your savings or pay down debt. There's so many things you can do when you do have those raises. Well, we're quickly approaching the end of our workshop here. I want to say thank you again, and please grab that link if you haven't already. We hope to see you next month, as we'll be talking about credit scores and credit reports and a bunch of goodies on how to navigate all of those pieces and answer any questions that you have. Um, so again, thank you for your engagement this evening. We hope that you found the information valuable. Um, we're here to support you all. So we hope that we see familiar names in the chat and, signups as in the near future. I hope everybody has a great evening. And until next time, have a good night, everybody.